YouTube family, thanks for stopping by the channel. Whether you're here for the in-depth cryptocurrency analysis or the mediocre gaming clips, I appreciate your support. Per usual, the views in my videos are not financial advice, and I am not a financial advisor. And as always, keep the hate in your heart and not in my comments. Enjoy the content. YouTube, Facebook, Instagram, everyone, Twitter. How are you guys doing? My followers, the Hawk's Nest. I hope you guys are all doing well. I hope you're not panicking in this sell-off that we've had. It's gonna get worse, honestly, in my opinion. I'll show you why here in the charts. I'm sorry that I haven't been posting as much. I was working a job that had me 60 plus hours a week. 1 week I even did 81 hours. It's not going to be happening anymore, so I should be on here posting more. I know I keep saying that, but my last video I talked about how I lost basically everything that I had in crypto through trading and getting emotional, and I'm still trying to recover from that mentally, and it's been hard to find the motivation to get back into this. But you know what, I can't be a victim to my own bad decision making and to the situation. I know I'm not the only one who got wrecked in these last couple of pumps up to 65K, and then the sell-offs, and then the pump back up and another sell-off. And frankly, I think it's going to get worse. I think we're still going to see a $20,000 Bitcoin or right around there, like I've been calling for the past, 7 months or so. And I will show you why here in the charts. Okay. So I'm going to keep this video relatively short because I know a lot of you guys don't want to watch 30-minute videos all the time, and I get that. But let's just get right into it, and I will be doing my best to at least post a video a week, which I'm going to set the goal low there and hopefully surprise all of you guys. But here we go. So I'm going to be looking at the Bitcoin USDT perpetual futures contracts on Binance, mostly because it has so much volume, and typically the futures market will kind of dictate the rest of the market because it's all of the big money will be using some sort of leverage, probably not crazy high leverage, but they will be using some sort of leverage to short or long the market. Considering that whales still control a lot of money, a lot of assets in the market. Realistically, a 5% dump or pump that they can make happen easily by either removing assets from exchanges or putting assets back onto exchanges can create buying pressure or selling pressure. And there's lots of different ways that they can, because of the fixed supply of crypto, they can manipulate price in different ways that aren't so obvious, like the stock markets. And it's not just all manipulation. I'm not saying that, and it's not just all whales manipulating this at all, but the charts do dictate a lot of what goes on. And as the charts play out and a lot of the people FOMO into positions or start panic selling, a lot of that, all it takes for them is to slightly change one candle in the big picture, and it can totally change the next 4, 5, 6, 8 weeks outcome. So let's go right here into, these are weekly candles. Okay. Here on the weekly, we're going to be taking a quick look at kind of what's forming here. Okay. Down at the bottom here, we have the MACD. Okay. The MACD, once again, red waves selling, green waves buying. You're seeing crossovers here happen on the indicators and everything as well. When you start seeing the color changing on the MACD from a dark green or a dark red to a light green or light red, that is indicating that it's losing its power and that it will be switching over soon, right? So if we look at these candles up here, okay, and a lot of people like to go with a head and shoulders pattern. One of my favorite YouTubers, Blockchain Backer, talks about this a lot. It's one of the easiest patterns that you can learn. One thing I see forming here that could be an issue is potentially a head and shoulders forming, right? So we would have a shoulder here, we'd have a head here. We could be looking for another shoulder here, meaning we could have potentially a pump up to retest this area, okay, right in that 56,000 to 60,000 range and then get rejected. But based off of what I'm seeing from here, I really don't think that's going to happen. I think what is going to be more likely is that we are going to see this play out here, this double top, okay? I can't even grab this thing. I always struggle with these indicators. I think what's more likely is we'll see this double top play out here and here, right? We have a high here. We came back, we retested the moving average down here. This green moving average being the 50-day moving average, the orange one being a 100-day moving average, and we don't have enough information for a 200-day moving average yet to be forming on here. But then we had a sell-off, we retested that, we held it as support, and we bounced off, right? And we came back and we made a higher high than we had before, okay? And then we've had this sell-off. So what we could be looking at is a massive double top here, which took, let's see, from March of 2021 all the way until November of 2021 to play out. That's a pretty long time frame. Remember, these candles, each candle represents 1 week, one whole week, right? And now we have retested, and just recently, we have retested this 50-day moving average here, all right? And we've been rejected. So next what we're going to be looking for is to hold the 100-day here, which right now it's currently sitting at about 36,000 by the time it reaches down there. If we hold 36,000, we could start seeing it kind of fluctuate back and forth between 36 and 40,000 and then start making a move up potentially. But what I think is more likely, and I'll show you why I think it's more likely, is when we bring in these other indicators, okay? We look at the stochastic RSI, which is this indicator here, and let's compare it to what we see in the charts at the top, right? So let's go here where we had our first kind of blow off top up to 65,000, and our RSI, our stochastic RSI, all of the indicators down here were very, very low, even during that pump, right? So if these would have turned upwards, we would have gone to way higher levels, but we did not. And we can start to see the crossover back here, which happened in late February when we originally approached that 60,000 mark, right? We had a crossover on the stochastic giving us bearish indication that we were going to have a sell-off. But yet we continued to make a higher high 3 times, okay, over the next couple of months. So we went from 59,000-ish up to 62,000-ish, and then we went up to almost 65,000. Meanwhile, the stochastic RSI was showing us that we were kind of heading downwards, right? We kept having these little mini crossovers happening here on the stochastic, and then we had a bullish crossover on, let's see, the 12th of July 2021, which led us up to our next blow off top, right? And then if we look at the stochastic here on 30th of August 2021, we did have a sell-off when we ran into what had been kind of some previous support, right? Which was, if we always go by candle body closes, not the wicks, because the wicks don't really mean anything. It's all about the closes. So if we line up where some of these closes are, we kind of hit right in that range of 50,000 to 52,000 before we met resistance and came back and retested that 50-day moving average, this green line. All right. Here is the most important thing that I'm seeing on these weekly indicators. Our stochastic RSI here we had a high, okay, and then we had our blow off top up to almost 70,000, right? Meanwhile, our stochastic indicators here had another crossover at that moment, right? Almost on the same exact candle, which was the 8th of November 2021, we had another crossover, and we had made a slightly lower high, right? Some of the indicators were a little bit higher. This red line was a little higher than the blue line was. However, we reached into that same area, which on the stochastic did give us a double top. Then we had a bearish crossover, all right? What's happened now, though? On this last pump, right here, in these last couple of weeks, this last month, right, we had another bearish crossover on the stochastic RSI. The biggest thing to take away from this, if you look at it like this, we had a high, you could say a slightly lower high, if not the same high, maybe even a little bit more, if you want to look at it that way, right? And then now we're having a lower high on the stochastic RSI. So these three things combined just on the stochastic alone would let us know that during these bearish crossovers and the fact that we're starting to print some lower highs and everything, while price action was moving up, would be a massive bearish indicator, right? Bearish divergence, meaning that our indicators are showing something different in a negative way than the positive price action. So we're seeing negative indications with positive price action. That would be bearish divergence, right? So here we are with a very clear stochastic crossover, the stochastic RSI very clearly pointing down. And let's zoom in on the MACD here. What's happening on the MACD? We're seeing a bearish crossover on the MACD, heading back into a selling wave. These are not light candles, they are dark, and our volume should be picking up in this area, okay? We should start seeing something print like we did over here, where we had light greens turning into small reds and building up, like massively building up in volume. Once we start breaking some of these support and resistance lines, right? And let's say we start heading down into the low 30s, people will panic sell. 100% they're going to panic sell. One of the biggest things you got to look for, let's draw a very simple support and resistance rectangle here, and we'll just keep it into a zone. So I'm going to go by candle body closes and opens, and we'll drop this here. This will give us a range from about 35,000 to 31,000, that if we lose this range here, right? If we lose this range, we are for sure going to go into the 20,000s for Bitcoin, all right? Very easily, and it'll happen quick. If we look at the monthly charts, we can see almost the same exact thing. And if we zoom in here onto the stochastic RSI, we are battling. We had our bearish crossover in the stochastic, right? And now we're just barely hanging on there. We tried to have a bullish crossover here on the 1st of March, but it's not looking too good in my opinion. All right. So if we look at the monthly candles, there is really nothing that looks super healthy about this. If you're looking at the candle that we're currently printing right now, and this candle opened on the 22nd of April, so the next one would be May 22nd for the close, right? That is a ways away, sure, so a lot can happen. This can totally flip around and turn green, and if that is the case, that would be absolutely amazing, because if we really zoom in here on this candle, that would give us 1, 2, 3, and then 4 months, assuming we don't go any lower on this candle that we're printing now. That would give us 4 months that we have been forming higher lows on these candles, right? And I'm looking at the wicks here on these ones. So we would be bouncing out of this rectangle that I drew, right? And if you look at these other candles, these monthly candles resting, look at how they're resting right on top of that range that I drew, right? The closes of these candles resting right on top. okay? If this doesn't go any lower and it ends up turning green before May 22nd, that would be a ginormous good sign for us, because that means that we would we would have at the bottom it holding this area, right? It had held this area and it's been slowly working its way up in such a manner that it would be like this, right? We would be looking at something like that, an angle like that, which would be huge. And if this thing closes positive, then we'd be looking at more of an angle like that, where these green candles are starting to print and it flips, okay? So we have to keep an eye out for that, and we have to watch this range like crazy. The monthly candles do not look good. This double top up here really worries me. And if you look at how the monthly candles interacted with the Bollinger Bands, I mean, look at this. The top of these wicks just barely touched the top of this Bollinger Band, whereas back here in March of 2021, April 2021, and May of 2021, we were way outside of the Bollinger Bands, and we had a very clear blow off top. And I've talked to you guys about the Bollinger Bands before. Once you go outside of the Bollinger Bands, you are for sure going to come back inside of the Bollinger Bands, right? So what we could be potentially looking at, let's say this continues to play out for a little bit, we could see this even come down here, this candle, or the next one, potentially. It could even take a few months. If it takes a few months, we would be looking at the Bollinger Band that's down here. If we were to draw a line and continue this, right? Let's say we continue this up, and we have one more month with just a giant red candle like we had here in May. That could extend down to the Bollinger Band and touch this Bollinger Band, and look where this would end up being, right? Let's say we take this candle here and it comes down here and it touches the Bollinger Band as this Bollinger Band comes up. Where would we be? I'm sorry that's in yellow. I know it's probably kind of hard to see on your screen there. But that would put us, let me see if I can change the color very quickly. There we go. It's a little better, I guess. There we go. If that was a red candle that prints on the monthly, where would the bottom of this thing end up being? Right around $20,000 for Bitcoin, right? Now let's say that we start having some downward price action that will cause these bands to squeeze a little bit. So this band could even pull up and it could hit around 22, 23,000, right around there. I don't think we're going to go straight to a flat 20,000, but we could see a $23,000, $22,000 Bitcoin meeting the bottom of this Bollinger Band before it continues to start working its way back up. We have to be very, very conscious of that, because this could end up being a total massive panic sell for everyone. Everyone will start calling Bitcoin's dead, everything's dead, crypto's dead, da-da-da-da-da. I'm showing you only Bitcoin right now because you have to remember that Bitcoin moves the market still. Everyone's been calling for an altcoin run. I think that time will come. However, in the past, it's been when Bitcoin starts having this massive sell-off and altcoins are looking better. Looking at ETH and XRP and all of these other coins, ADA, everything, I don't see any indication that they are not following Bitcoin. I see all the indications that they are still following Bitcoin, meaning we could be seeing the entire market just take a total dump, which would kind of correlate with all of the geopolitical events and all of the narrative that they're painting and all of the nonsense that they're putting out there right now, okay? It would be blamed on all of the geopolitical and economic factors and the oil crisis and the food shortage and all of this other stuff that they're trying to say. Meanwhile, we can very clearly see here in the charts that there is already lots of indications that this is going. You have to remember that they cannot tell you what's going to happen before it happens, and they can't tell you the secrets to the charts, because if they did, then you would make money alongside of them and they would not be able to make money off of you. Now, would they? So let's look at the daily really quick for Bitcoin. Okay. On the daily, stochastic RSI, negative bearish crossover, MACD starting to build up, selling volume again. We had rejection here off of the MACD, so we continued downwards, facing very clearly down right now. And then if we look at the stochastic, I mean, look at this. That's pointing straight to the floor. And then right now we are touching the bottom of the Bollinger Band. If this thing explodes, remember when the Bollinger Bands tighten, right? How they're bigger here, wider in the birth of the band, and then tightening here. When it tightens, that means there's going to be some sort of explosive price movement. At this point, considering that we did not end up closing above this last candle, this green last candle, and we lost all of this support. I mean, if you look at the support here, right, that we just lost, right here at 39,000 or so, we lost that. So where is our next support going to be? Okay. Our next support, if we do some more candle body closes, would be right around here, kind of almost exactly where we are right now, right? Exactly where this wick is just about to touch. And then if we were to lose that, and you guys can do this at home too with TradingView, right? Your own TradingView. We can draw another one here. That would be our next closes that we'd be looking for. And if we lose these supports, and the last support really being these candles that are over here, major ones, if we lose 35,000, which is something I was just telling you about in my in the range that I was showing you in my rectangle, if we lose this last close here, and we break down below that, and we start closing days below 35,000, we are going to see an absolute crazy sell-off, right? We're back to weekly charts here, weekly candles. If we lose these support levels, we will absolutely dump. I have no hesitation in calling that. I know that will happen. And then if we look back over on candle body closes on the daily, let's zoom out quite a bit, and we'll go over to when we were at the 20,000 mark and see where our support and resistance lines would be. It would be these major lines here. We'll go, let's do ranges. I like ranges because it's very hard to predict like accurate pricing, right? I'm not a wizard. I can't tell you guys it's going to be exactly something. I would rather give you a range to watch out for. And then if we're looking at this range here, bam, and let's extend these boxes over there and here. Okay, now let's zoom back to current price action, and this is what we would be looking at. These are the ranges we have to watch. If we lose 35,000, we will go down into this 28,000 or 29,000 to 32,000 range. If we lose this range, we will immediately go down to 22,000 to 24,000, exactly like I was showing you at the Bollinger Bands and all of the other indicators that we can look at. So cumulatively, looking at all of this information, okay, it does not look very good. When we're looking at everything that we see in these charts that I've just showed you guys, we have plenty of indication that there's going to be a sell-off, okay? We need confirmation that we start getting green candles, we start seeing buying pressure increase, we start seeing volume pick up in a positive way, buying volume, not selling volume. If we start seeing selling volume, then we know for a fact if selling volume is picking up, there is going to be a panic sell. All of these people who have just been buying all of these nonsense and NFTs and all of this other stuff that they've been putting their money into and all of the crypto that they've been putting money into and everything, they will panic. They will. This is not a market for the weak-stomached and weak heart. You can't. You have to play the long game, okay? You have to play the long game. Remember, they will do absolutely everything to get you out of this. They do not want you to have money in crypto. They want to take every dollar that you will give them. When you see massive red days, what do? Hawk's Nest, huh? We buy. We absolutely buy. Do not forget to take profits. Do not forget to have target points where you're going to pull out at least your initial investment, which is something that I should have done a very long time ago when I was up $3-4 million in crypto, right? I should have done that. That would my conscience now would have been so alleviated because my family would have had their money back. We would have had our initial investments back. Our loans would have been paid off. Everything would have been settled, right? Instead, I kept the money in. I kept reinvesting in things. I kept putting it back into other stuff. And I'm not saying that's not the right move in the future, but take your initial investment out. Protect yourself. Play with house money. You have to. Okay? I appreciate all of you guys. I wish you the best. I hope you can just hang in there, hold on tight, keep it going. Keep putting in that money that you can. Invest what you can. Do not invest more than you can lose. Don't take out another mortgage and put it in there unless you can afford the other mortgage. Don't take your kid's college fund and put it in there unless you can pay that college fund back out of your own pocket. I can tell you from firsthand, you can lose everything in this market by being emotional, by being irrational, by getting caught up in the hype and all of the nonsense. Do not read into the narratives. Do not watch the news. Do not read the news. Do not listen to any of the nonsense that they peddle to you on any mainstream media, on anything like that. Don't look at the Twitter news. Don't look at the Facebook news. Don't look at any of that stuff. It is all garbage. It's meant to fill your mind with fear, uncertainty, and doubt. FUD. They are purposely trying to FUD everyone geopolitically, socially, in our interactions in everyday life. They want us to live off of fear and out of a worry. That's how they control everyone. Do not let them control you. Do not be a sheep to everything that they push out there. Do the research, invest in yourself, invest in your future, invest in gold, silver, and crypto. Be prepared for a massive stock market crash like we have never seen that will make the Great Depression look like nothing. The food shortages, the oil shortages, everything, they're preparing everyone for it. And if you look at the stock market indicators, they are not looking much better either. Currently, I think the Federal Reserve is printing $150 billion a day. $150 billion a day. And they're increasing that. And they're handing out trillions of dollars to other countries instead of giving that money back to us. So they're printing tons of money to give to other countries for aid. And most of those other countries, that aid ends up disappearing, or a good portion of it. And that's our taxpayer money. That's your hard-earned money. That is the money they're stealing from you. Put every last cent that you can afford to lose, that you will not lose sleep over, into crypto, gold, and silver. That's all I can say to you guys. Hold tight. This is still a young market. We had barely just breached $1 trillion, right? Barely. $1 trillion. Gold alone is what, $10 trillion or something in its market cap? The derivatives market is $1.4 to $1.8 quadrillion. I mean, the amount of money that will be funneled into this market is nothing. Can you imagine if we take over gold's market cap? A 10x from the highest high we just had? Most of these cryptos, first of all, their fees like Ethereum and Bitcoin won't even be able to handle that. At the last high, I was trying to send $100 in Ethereum and I had to pay $50 in a fee. How does that make any sense? That is not improving the world. That is not real world utility. Bitcoin's current mining structure is enough energy consumed to power 3 third world countries. 3 third world countries. That's how much energy it takes to run Bitcoin right now. Can you imagine if there's $10 trillion in the crypto market? Bitcoin alone is at $1 trillion in market cap? The energy consumed from that will not be tolerated by the global elite. It will not last through the green push. Go for the coins, XRP, Cardano, Hedera Hashgraph. There's so many algo, so many things. I mean, there's so many better options out there, guys. Research where they're putting their money, where they're putting their chips in, and go for that. They love Bitcoin because it's so volatile and they can leverage the crap out of it with massive bags, and a 5% pump on their $10 to $20 million that they took a position in is money in the bank for them. Massive money in the bank. I say it every video, so the past couple videos, look into ISO 20228 Yeah, 20022, I think it is. I'll look it up again just to run you guys through it because I forget the exact numbers because, you know, it's a lot. ISO 0, oh yeah, I was right. ISO 20022. Do not forget that they have already listed these coins that are participating in this, right? Ripple, Algorand, Ravencoin, Visa. You have so many different coins that they're putting into all of this stuff that will be part of all of this. And I will touch on this again. There's only one cryptocurrency company coin that is on the board helping make this happen, right? And that company is Ripple. This is funny. You can't even find Ripple and XRP on Wikipedia anymore. It's almost like they're trying to hide it from you guys. They do not want you in this with them. They don't. You have to remember that they're putting their money into these coins for a reason and into this whole new messaging standard that they're going to do. And if you even look here, Federal Reserve System, let's go to this link, right? Here we go. Adoption of ISO 20022. So the Federal Reserve is going to adopt this messaging standard, which Ripple has helped put together. Okay? They've helped put it together. Right here, Federal Reserve Resource Center, and they're implementing this. Don't forget, they don't want your money in it. They want to take your money. They don't want you to be wealthy. They want to be wealthy. They want to tax you on anything that you can put forth, which is why we are going into crypto and why they're pushing it, because they want to tax every 10,000th of a penny that they can. Do not forget, guys, this is a long-term game, and we will be successful in this as long as you hold tight. As long as you hold tight. 4 or 5 years to become a millionaire is nothing. It's nothing. Don't lose sight, guys. Do not lose sight. I love you all. Thank you so much. Sorry, once again, I'm rambling, and it's a 30-something minute video because I don't know how to make anything shorter. And for you guys who stayed until the very end, thank you so much, and I really do appreciate you guys. I appreciate every single one of you, no matter what. Please share this video, like, subscribe. Give me that motivation to come back, man. I'm really gonna try, but you guys were a huge part of it. My success and the love and the gratitude and everything that I had got from you guys on my first Safe Moon video, which I think is 65 or 66,000 views now. Like, insane, man. Absolutely insane. And I'm only averaging a couple hundred views now, which is fine. I do this to teach you guys because I'm articulate enough and I have enough knowledge to help anyone out. But I really do appreciate you guys. We can grow an amazing community here as long as we remember it's us against them. We are the 99% against the 1%. And realistically, it's more like the 99.6% against the 0.4% because they own all the money and they own all the banks. They own everything. And I love you guys. Have a great rest of your day. I hope you have a great rest of your week. And I will post another video before the weekend comes, and we'll see how this develops. You've got the prices to watch out for. You got the things to look out for, and just be prepared. Get that cash on the side, and be ready to put some more money in. All right. Have a great one, guys. Thanks again for stopping by the channel. I appreciate your support. In a second, you're gonna see some pop-ups that are going to have all of my social media links and everything that you want to know or hear or see from Nighthawk. So click on them. I hope your crypto bags stay full, and I wish you all good fortune in life. See you on the next one.